Ooh, I am full from all that turkey. But I can talk about accounting because this is the IssuesWatch podcast. Hello and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm the partner in charge of accounting and auditing with Sobelco. These episodes qualify for nano CPE credits. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. Quick disclaimer, the views and statements expressed herein are my own and not necessarily those of NJCPA or Sobelco. Okay, some cleanup topics, some topics we've discussed a little bit in the past. This isn't trying to be repetitive, but I just want to emphasize a couple items. But let's start off with something that's new that I found kind of interesting. Did you know that the FASB has a small business advisory committee? I was unaware of it. Established in 2004, so I guess it's kind of new, huh? It was created to obtain an involvement by the small business community in development of financial accounting and reporting standards. In 2016, the FASB shifted the primary focus of the SBAC to small public companies, which is probably why we don't hear as much about it. But it is very interesting that they have this. And the reason why I wanted to bring this up and bring it to your attention, if you are with a public company or even private company, you should just be aware of this content. And if you don't get if you haven't signed up for FASB emails, you should sign up for them because they do send out some regular emails with some good information, some content updates. So look to sign up for that. But the role of the SBAC is to provide focused input and feedback for small public companies' perspective, considering whether there are differences that input from small public versus private companies' perspectives. So that's where I found it really interesting. So it does make a connection of small public companies with the private companies. Assist the FASB and its staff in the consideration whether private company accommodations should be extended to other small business community. The important thing is if you see stuff that comes out on this, you can then comment on it. A recent meeting, they talked about, here are the topics, going to sound very familiar to some our other presentations, like when you saw Frank here. Software costs, accounting and disclosure, the modernization for existing software cost guidance. Income tax disclosure, I said that I think over the past 2 or 3 sessions. And segment reporting, that's going to be a big area that they're going to be focusing on, is segment reporting and expanding, not just for public companies, but for private companies, potentially expanding the presentation on the income statement FASB is looking into. So you should watch out for that. So that's the SBAC. I wanted for you to kind of be aware of another unit of the FASB. There's a bunch of different areas, but you should be aware of this one. And again, sign up for their emails. You will get a lot of information, not just of this committee, but all the other activities that the FASB is involved with. So a topic that I brought up a lot lately, leases. If you remember from a recent episode, I talked about some proposed standards. And the reason why I'm bringing it up again is I just attended a seminar relating to leases put out, and it was given by the Center for Plain English, which is an AICPA unit. And it talked a lot about this guidance that's out. Now, in the past, you probably heard me say, for related parties, if there is no documented lease, then there is no lease. And it's not even related parties. It could be non-entities under common control. Well, the FASB has come out with some new guidance that if there's entities under common control and there is a non-documented lease, you have to analyze further. So this is contrary to what I said before. You have to analyze further to determine if there is an actual lease in place. And what the presenter said and so another presenter said, both of them at different sessions at the same conference I was at, you may have to get legal counsel involved to determine if there is an actual lease in place. Now here's the problem that I have with this. The last thing that especially private companies want to do is start getting their legal process or legal advisors involved in accounting concepts and incurring costs with that. The other issue that they brought up was the depreciable lives of leased assets. You probably heard me say this in another episode, but if you have a lease right now, the depreciable life of an asset for a leased asset is the shorter of the economic life or the life of the lease. You lease a building and it's 5 years, you're supposed to lease depreciate it over 5 years, compared to 39 years for tax, or that's the life of the lease, or 39 years for tax life, or the economic life, let's say 30 years, whatever it is. Now they say you can do it over the economic life that the lessor is using. Now, if you leave the property and there's still some value to that asset, what is to be done with it? According to the guidance, it says it reverts back to the lessor. One of the presenters that was speaking said it actually becomes a dividend or distribution. Well, that could have some tax impacts, and that's pretty significant. The reason why I'm bringing it up is I don't know if the FASB is really considering all the potential aspects that happen here. So I recommend you look into these, but more importantly, if you have a strong opinion on these, don't wait for the New Jersey Society CPA A&A interest group to focus on this. Reach out to the FASB and give them your comments on this and your positions and where you think they should be going with this. Editorially, I think that they should put entities under common control on hold right now and scope it out for a while until all this is evaluated. Particularly because my last comment is, remember, consolidated and consolidating. When you have consolidated and consolidating financial statements, the consolidated is fine. You're not going to have the right to use asset for the entities under common control. If it's consolidated, it would be eliminated. But on the consolidating schedules, if you're doing them in conformance with GAAP, you have to, push it down and have the right to use asset and lease liability on each company for the related party or consolidated leases, and then eliminate it. Sounds like an exercise in math, but you have to consider this. The A&A interest group, we discussed this recently, and one of the comments somebody said, I think it was Kelly on the committee, gave some good thoughts. Somebody, CPE even said it too, is you don't have to do the same method of accounting for the consolidating as the consolidated, so long as you can reconcile it. I'm not going to go that route. I don't know if the exercise in math is annoying, but again, I think the FASB should look at this and see what we should do with it. Okay, that's FASB updates. The PCOAB proposed a standard on the firm's system of quality control. Sound familiar? Well, go back a couple episodes and look, and you could look and listen that I talked about the AICPA putting out the standards that are now effective on quality management, the quality management standards. Their proposal, which is 394 pages long, so if you need something to read, please look at that and you find that interesting. It supersedes the current PCOB quality control standards with an integrated risk-based standard. That's exactly what the quality management standards is doing too. It's very risk-based. Quality management standard says you have to assess the risk within your organization and everything that goes into the attest function. It creates reporting requirements on control matters and a new non-public reporting form QC. So if you do public company work, SEC work, or even broker-dealers, you have to file certain forms at the PCAOB. This would be another form that you would have to file. It expands the auditor's responsibility to respond to deficiencies in completed engagements, and it supersedes the existing ET, that's the Ethics 102, with a new standard ET1 or EI 1000 integrated and an objectivity to better align the ethics requirements to the scope and approach and terminology. So it's interesting they put that out there. They do invite people to comment on it. So if you do public work, I strongly recommend that you look into this. If you are at a public company and deal with auditors in this area and you think you could have some influence on it, I strongly recommend that you look into that too. Another thing that came out is the PCOB had a seminar, and they do these free seminars. They're pretty interesting, and this was a small business and broker-dealer audit forum. So if you do small business, public companies or broker-dealers, I recommend you look into this. I believe it was recorded. And they really give some good insight, and especially it adds to your competencies. If you do this type of work, you want to have the proper CPE to go behind it. It was on one slide, they talked about the deficiencies that they found in their inspections in 2021. Here are the areas that they found the deficiencies. Internal controls of financial reporting, revenue-related accounts, accounting estimates, Critical audit matters. Now, broker-dealers, you may not be reporting on critical audit matters, but remember, this also discusses other registrants too. Auditor tenure and independence. Now, remember, if you do SEC PCOB work as auditors, we're very restricted on what we can do with the company. You can't type the financial statements, you can't even bind the financial statements. It is an independence issue, and that's just one piece of the independence aspects. But you should look into this session and go through it, especially if you do public company work. So one last area I will go into is FTX. I'm not trying to get into to say anything, but I will say if you do look into some of this FTX bankruptcy stuff, as it relates to the accountants, they're kind of hitting some areas that we as accountants and auditors should be focusing on. And particularly something that we hear a lot of times within the audits that we're working on is related party transactions. Keep that in mind. When I did a planning meeting recently with one of our audits, I actually brought one of the tax people into the meeting. I know you're saying bringing tax people into an audit planning meeting, it was extremely beneficial because they started listing some entities that I didn't even know were related parties. So you really need to enhance your thought processes and audit considerations as it relates to related parties, not just because of FTX type issues, because it's important that you have a full understanding of what entities are involved and how it could impact financial reporting. Again, a few editorial comments in there, so I apologize, but still, it is accounting and auditing. So in closing, I'd like to let you know about some upcoming NJCPA events. The Society's annual nonprofit conference is on December 1st. The Hudson chapter is holding an in-person event covering compilations and reviews and professional liability insurance on December 6th in Secaucus. And there's a 4-hour webinar on December 12th on avoiding deficiencies in peer reviews with a focus on audit quality. Register for these events and more at njcpa.org/events. And be sure to join the NJCPA Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. Thank you for watching or listening.